Hello everyone, I'm Aarti Nagraj, editor of Gulf Business, and a very warm welcome to this special session today, hosted in association with AIX Investment Group. Now, there's a lot of buzz going on around investment these days, whether it's people with wealth who are looking to grow their fortunes further, or it's young professionals who are looking to create nest eggs and also retire early. And also, in times of crisis like the one we are in right now, investing smartly can also help us not just grow wealth, but have financial stability and security in the longer term. But in a place like the UAE where we live, the majority of us, the residents, are expats, and many may choose to go back and retire in their home countries or relocate elsewhere. So, is it really prudent to invest in a long term retirement type plan or have a portfolio that's more tailored to the kind of needs that we have here? Also, looking further, is it actually possible for every one of us today to start investing? To understand more about all of this, we are very pleased to have with us today Harish Prithvi. He's the Director of Strategy at AIX Investment Group. Thank you so much for joining us today, Harish.
Thank you, Aarti. Thank you for having me here. Again, privileged to be here and to be addressing to a large audience as yours. Looking forward to a very fruitful interaction and see how I can answer to the best of my abilities all the questions that you might have.
Great. We'll start with the current investment landscape. Now, I think every discussion we have today always starts with COVID. So it has changed everything in a way that we look at, the way we look at things. So what are investors looking for at present? And looking at it from a risk perspective, have they become less risk averse, more risk averse? What are we looking at right now?
Yes, indeed, the crisis has changed the landscape of investments in a very, very large way, and with it, the investors' mindset as well. More than ever before, they now understand the importance of additional revenue via investments to handle times as this. Okay. Aversiveness towards risk has been a growing trend with first-time and amateur investors, if you want to call it. But we also understand why, because of the crisis. They're obviously taking a step back, yet want to do this because they understand the importance of investments. But at the same time, seasoned investors see this as an opportunity and are willing to take a calculated risk more than ever to capitalize on the market conditions. So I wouldn't call risk averse. It's a calculated risk approach that's actually changed. But like you rightly said, what are they mainly seeking at present? If they've never considered investments in the past, now they are, because they understand the importance of additional revenue streams and growth capital more than ever before.
When you talk about these investors, what kind of investors? Are they young people? Are they a mix? You know, what do they look like, these investors, these new investors?
If I have to demographic this amongst the investors that we have had, it's a mix at spread, but I would say mid 30s to late 40s is the crunch of it. Most of them are pretty much from that age group. But we also do have a lot of young investors coming into our office and asking more about what's happening with the investments that we have. With our marketing strategy that we have in general, we do focus on the younger population more than the mid-age population, if you want to call it. So therefore, we have a mixed spread. The elderly, if you want to call the above 55, above 60 mature investors, are always seeking to diversify their portfolio into multiple books, and obviously us being one of the contenders in terms of catering to their needs. So I would still call it a spread basket, but more so in the mid-age.
Okay, interesting. And it also kind of reflects the demographics we have in the UAE right now. Talking about the UAE, like what I was saying in the start, we are in a country where majority of us are expats, and many are not necessarily looking for very very long term portfolios because we are not sure about long term future. Many may decide to relocate to another country, may decide to relocate back home, retire there. So are the portfolio requirements very different for a place like this?
Thanks for that question. It's an interesting one. I would not go on to say they have different priorities. because an investment philosophy, by and large, can be fit under two umbrellas. There's really not a third one. The two being either I want to grow my capital, or it would have to be I want my money to work and create an additional revenue stream. It's either or, always. But how they go about it is where the difference kicks in. So, as far as UAE-based expat investors are concerned, I will go on to say even this is a GCC expat sentiment. The difference is in the time that they want to plan their investments for. It's never about the amount or the risk, because, like I said, different investors have different mindsets, and it can easily fit into either or. But the time is what defines. Now, since you asked the question specific to UAE, the majority of them live visa to visa. The heavily expat-driven population, irrelevant of being self-employed or salaried, they all live visa to visa, and therefore they seldom look for options that are longer-term investments, which ideally they would have from the home country they're coming from. Therefore, in order to cater to their needs, having investment products that are structured around the short to mid-term outlook. When I say short to mid-term outlook, it's anywhere between 1.5 years to 3 years, not exceeding 3 years, allows them to appreciate and plan against their financial goals, which we do at AIX. However, irrelevant of the geographic location, we do cater to a global audience. I have to say that even if the UAE-based expat population were to, let's say, move back to their home countries or elsewhere, our products still cater to them. But the very comfort of knowing that these products are built for a short to mid-term financial goals helps them in their decision making, and that's where I think the difference is. And we kind of do that and take concentration into how we can cater and bespoke solutions for those expat population.
Um, is that a changed scenario, or do you think it was always the case in a place like this where, has it changed now over a period of time, this mindset?
I would say this change has happened over the last 6, 7 years, probably coinciding since the Expo announcement. Obviously, we do understand UAE has been a growing economy and it will continue to grow so at a much more faster speed than most of the other countries that we have around in the region. So, with that investors' mind, or rather, expat population's mindset change, with that mindset change comes the investment mindset change. So, therefore, I think this growth or this change in mindset has been the last 6 to 7 years. And even with us, it's not like we've always set out to do this. Over the last 5 years, we have continuously chopped, blocked, and changed our products to suit investors' needs. This is a conscious decision we took about 4 years back, and we have played to our strengths. And I think it also reflects in terms of what kind of portfolio we manage and how it has helped us grow as a company and as a portfolio that we manage under.
Um, this is an interesting trend. What are the other trends that you see which have developed not just in the last few years, but specifically around the crisis now? And also, what do you think is going to continue post-crisis?
Okay, I'll answer that in two parts, maybe. See, personally, investors are more cautious now than ever, which I kind of told you at the outset. But at the same time, they have realized the value and importance of passive revenue streams. So, growing a dormant capital seems to be the trend that most of them are aware of. It's not even us telling them or advising them, it's the investors themselves stepping forward and say, obviously, given the situation, Harish, you understand that we don't want our funds to be dormant. And obviously, it comes in handy during rainy days, such as the ongoing pandemic. So, obviously, that's the change that has happened. I would say that's the biggest trend change that will remain post the crisis. Uh, any new ones we anticipate coming up? Yes and no. I can't say for the long term, but for the short term, what I do would like to say is bespoke solutions. Gone are the days where investors are pitched with standard products and standard features. The big difference between us and any other firm in that aspect is we are not just an advisory firm, we are also the traders. So we are not just the advisors, we are also the doers, which gives us a different perspective in terms of how to manage clients' expectations. This allows investment management companies such as ourselves to stay relevant and be the torchbearer leading the change and adaptation in terms of what kind of trends that they're looking forward to. And that primarily, in my opinion, is bespoke solutions because people are not looking forward to standard products anymore.
When you talk to them and offer them, do they come in aware that they're bespoke solutions, or do they just come in with kind of, nothing in mind, so to speak?
Again, I would categorize these investors into two different streams. One would be the one who's seeking to know more about us for the first time. Obviously, they don't come in expecting anything bespoke. They get surprised more often than not when we tell them this is how, in many different ways, we can structure different products. But the second part of the revenue income stream in terms of clients is coming from references from existing clients. And majority of them refer us as an investment manager or investment management company to other friends and family, not because of the returns or anything, but purely because of the features that we offer, which revolves around how a product can be customized to suit a client's or an institution or a corporate's individual needs.
A big part of it is still diversification of assets. Do you see that when you offer that, do investors understand that, and are they more on board with diversifying their assets?
Uh, Interesting. Actually, I would like to answer it in a different way rather than answering that question straight. See, the asset classes that we work on or we trade on has always remained the same. So are my competitors, so are any entities that's not even in the same league as ours, meaning they cater to a very different audience. The core is always the same. It's the structures that makes the difference. So I personally feel the difference that we make is with the structuring aspect and how we package it as a product to suit their needs. That's why the difference is. So therefore, that will continue to be so. And the more and more we understand our audience in terms of what their needs are, we either improve the product or create a new variant. We started with one product, now we have four, and we already are working on two more. And but these are not where I tell the investors I have six products for you to choose from. Absolutely not. We always categorize them into what their needs are and only pitch to them what is required for them. These six products are very different audiences and different categories. So that trend will continue with at least with us because we rely on structures, not the standard asset classes that we actually use to trade on. What we do with it and how we package it is where the difference is.
You mentioned a bit about AIX already, what you're working towards, but what are your plans, medium term, longer term? What is it that you are looking at in the drawing board?
Yeah, I think I kind of answered that now. Let me put it in a different way, specific to your question in terms of what are medium and long term aspects. Okay, so we at AIX have always relied on our ability to be as transparent as possible in all the financial products that we do and all the structuring that we do. In order to do that, financial structuring has always been the key, like I just said for the previous question that you asked. To take it a notch above from our existing licensing and regulatory framework, we are currently working on a much more stronger regulatory framework within the region and on a global level to ensure that all questions are not left unanswered. So any investment company, it's by and large investors approach the investment firm always with some amount of inhibition in terms of, am I doing the right thing? So, and this is one industry where clients walk in questioning you more rather than seeking for answers. So the answer to all those concerns is always in how transparent you are and how regulated and strong you are within the licensing and regulatory framework of the region or in whatever region you operate under. So we're also constantly working on more investment structures, like I said, to cater specifically to the region. And we do intend to make ourselves a front runner in our industry with three core aspects: innovation, transparency, and safety at the core of our thought processes. To that effort, we are making sure that we leave no stones unturned, yet not move away from the core of our vision, again, which is grow organically with absolute transparency and safety, always at the helm steering us towards further growth and success.
Um, one more question, just to like kind of tie it in with what I started off in the beginning, and what you said right now. So people who come and have a lot of questions, like you said, is investing right now a good decision for everybody? Would you say that?
As far as you have some amount of dormant capital lying around with you, I think there's no better, you kind of answer that question in the question itself. You should be looking at doing something with that money. How you do it, how you go on about it, Is it a short term or a mid term or a long term is completely upon your purpose of what you do with the capital. So I would answer that question in two parts. I would call it my personal opinion rather than advisory. I don't want to stick to an agenda. I would personally, this is what I would do. I always look at how to offset my fixed expenses. Okay, there's a big difference between the term profit making and wealth building. If you want to do wealth building, you have to let go of profit making. By and large, investors look at profit making, therefore lose the larger goal of wealth building. If you're able to strike that perfect balance between these both, then it's a completely different ball game you're looking at. So depending on the age, like you rightly said, at any age, it does make a difference between what age you are in. Your earning capability is much higher. Your saving potential is much higher when you're probably a little older, unless you're in one of those rad jobs which pays you really well at a very younger age. So therefore, that's exactly why the mid 30s to the late 40s is your primary age group, because they're at that sweet spot that their earning ability is good, their fixed expenses are constant, and they have some amount of savings, which then allows us to advise for the purpose of taking care of your fixed expenses, allocate a part of your portfolio to have profit making, which caters to your fixed expenses, while the remaining capital can be looked with the goal of a growth capital, then you're doing wealth building. If your fixed expenses are taken care of, and a part of your savings is growing into a larger capital month on month, year on year, quarter on quarter, then what you're earning suddenly becomes additional wealth which you never need. Now, then it allows you to plan in a much better way as to what is what. But again, by no means am I saying don't enjoy the perks of life. Do that, but do that in a smarter way. Are you able to balance it in terms of investments, expenditure, and wealth building?
And any advice you would give, like to a new investor who's kind of just planning to embark on this journey? What should they keep in mind?
Take risk because you're young.
Perfect.
Because someone had told me I wouldn't call myself as an expert in terms of advisory. I'm very good at structuring. That's what my role in my firm is. But if someone were to have given this advice to me when I was younger, I would probably be a little more wealthier than where I am right now. But no regrets. I'm very happy to pass on that wisdom to younger investors, if you want to call it.
Perfect. Thank you so much for your time, Harish. It was really interesting. And I think that's really good advice. There is a lot of confusion as well. There are a lot of people who are interested in going down the investment path. But there is some confusion, there are some doubts. So it's good to always know what you should be doing, what you should not be doing, and take risks. That's something in the current climate, it does become a bit difficult. But like you rightly said, I think it depends on the age, on your circumstance, and all of those factors.
Absolutely. I agree with you. I couldn't agree with you more. Truth be told, I've discussed this with you the last time we met also. The interest level in terms of, I'm not talking about age group here, the interest level around investments has seriously surprised me in the last 1.5 years. It's probably got down to two factors, like I said. One, the ability to understand the importance of investments more than ever. Two, people have time now, had time now, right? So they have to think about these things, and the world going digital, and we are doing a webinar right now via the same pattern. So it was much easier to reach out and ask for, hey, am I doing the right thinking, or can you advise me on something? I think that's what has changed, and that has surprised me for the last 1.5 years. And with changing times, we have to change our strategy as well. And that's what we've exactly done to cater to such audience. And I hope the listeners who are watching this do understand this and reach out to Gulf Business or ourselves as and when they see fit.
Thank you so much, Harish. With that, we come to the end of today's session. Big thank you once again to Harish. We hope you enjoyed the session, found it beneficial. Do let us know all your feedback and comments. Also, please do follow us on social media. We are at Gulf Business on Twitter, Facebook, LinkedIn, and Instagram. Thanks and have a great day ahead.